All right. Good day, everybody. How are you?
Hello, Mr. Stewart. How's it going? Cam here.
I ate, so I'm good.
Oh, good stuff. Good stuff. Hey, everyone. Thanks for coming on board. Looks like you managed to claim a spot. Hopefully, we don't get an influx in the last minute and people get knocked out. Hey, Mark. How's it going? I can see you here. Mark Tipping.
Yeah,
Nice to meet you.
Yes, yeah, good to see you too, mate.
Oh, you're off mute as well. Oh, good to talk. This brilliant.
I'm on mute? No?
No, I can hear you. I can hear you.
Good.
So fantastic. So we'll wait a couple of minutes and see if we can get a few more people in. So they're gradually sort of coming in the door here. Got a bit of a treat for you guys. To be fair, I haven't seen the presentation that Andre's put together, but he's walked me through it. Is that Mr. Sloper?
Yeah, man, I'm out on the farm trying to join this meeting. Here's my tractor.
Brilliant.
Hey, how are you, my man?
Yeah, good, bro. Good, bro. Missing you guys.
It looks amazing where you are. What does the view look like?
Oh, yeah, if you think 40 degrees is amazing.
Yeah, I usually do, but it's because I never get 40 degrees. Where are you again? Oh, look at that.
The cows are saying hello.
Nice. Looks like heaps of fun.
Yeah. I don't know how I'm going to go, but I'll try.
Yeah.
All right.
Good effort. I think that's you won the award for most effort on trying to get onto a webinar.
Yeah, that's
This
definitely.
is my life. Driving tractors and staring at my phone trying to study Forex.
Well, not for long, my man. You're going to be trading full time soon.
Yeah, I reckon you're right.
Yeah, I know I'm right. I saw your setups that you posted today, man, in the group. So, man, you're on your way.
Yeah.
If you guys don't know Craig, he's on the actual 52 Traders podcast. If you want to hunt him down and hear his interview, so it's actually really, really, really good interview. Some useful tips on there for anyone that's wanting some practical advice on stuff to do. I found it fascinating, Craig. It was really good.
I'm a lot closer to cracking it now than I was then.
Oh yeah. I know. I've seen.
Yeah, man. Nothing like dialing it into something tangible, right? Like that's what the game's all about.
Yeah.
It's all about.
Now the chat. We got the chat going here. Where's everyone from anyway? Do you want to put it in the chat, or it's probably easier if you put it in the chat?
I'm from Northern Victoria.
No, you got to put it in the chat, Craig. Can you take your hands off the steering wheel?
I'm just kidding. And drive? What the heck?
Yeah, I'm just kidding. Oh, there's a few others from Melbourne as well. 2 others from Melbourne. And Canberra. Oh, yeah, Mark. Wodonga. There's a lot from Australia. It's a good time for Australians, obviously.
Dude, Toronto. I really want to visit Toronto. Central Florida. Okay. Nice.
Detroit. Richard from Detroit. Cool. Brilliant. All right, Andre. Looks like we got.
I got a bit of a discount. London, man, I want to come to London. Detroit, hey man, you guys playing good basketball out there lately with Blake Griffin, so that's exciting. Hey Stewart.
Hey Stewart, how's it going?
Just talking to you.
Look at that view. It's amazing.
It truly is.
Righty ho.
All right, guys. I got a bit of a getting ready for bed. It is late for you. It really is. Got a bit of a disclaimer. You will hear my children in the background. I am a father first. So yeah, just do what I do. Ignore them. All right, let me see here. Let me mute everybody. Then we'll get to it. Let's go into here. Muting everybody. Excuse me, I'm just muting everybody. Mute. Just going through and hitting that mute button. Mute. All right. All right, guys. So I got a bit of a. So today we're going to talk about literally how to stop being a retail trader. And that Iowa, nice. Oh yeah, John. Hey, nice to see you, John. So we're literally going to talk about how to stop being a retail trader. I think I find that even mentoring and even in myself before I became profitable, that was a bit of an issue, is thinking, acting, behaving like a retail trader. So put together a little slide for you guys as well. Here we go. All right, so stop being a retail trader. And of course, this is me. It's the website, chartartisttrading.com. So I think the first, well, I know the first step in transitioning yourself from thinking like a retail trader to an actual professional trader is mastery of self. So you will tend to trade your personality type. And that's a quote made by me. Hold on, mute someone. There we go. Mute a couple more people. There we go. So take a hardcore look at your own life and see the connection to the actual pace in which you live. It will play a part in the style and the manner in which you trade. Case and examples. Scalpers, they typically are fast-paced. Intraday traders like myself, more moderate, the truth lies in the middle type of people. And then you have your swing traders who are super patient and has more long-term thoughts. The risk will vary depending on the style. I'm a high-risk trader, as people in my group know, but I'm also an intraday trader. So.
Hey, Ryan. What are you doing?
All right, we're gonna have to mute a couple more people. Hold on.
I need to talk to you guys. I want to learn how to camp. You don't know how to camp? Didn't your dad ever take you? A couple times he told my mom he was taking me camping, and then we'd go to the casino and I'd wait in the car. One time he actually lost the car and we had to sit at the bus station, so I guess he kind of took me camping. Man, your dad sounds cool. Wait, I don't think I heard all of that.
All right. If you guys could just mute yourself, because I can hear your TV. And we're definitely not watching TV.
This evening's going way too fast. I wish I didn't have school tomorrow.
It's John. All right, John, you're being muted, my friend.
Because I never did. Please, you probably do my signature better than I do. In fact,
there we go. No more TV show. Sweet. So the risks will vary depending upon the trading style. Again, I'm a high risk trader, even though I do trade intraday. I do a little bit of swing here and there. But again, it's all about win rate and with that. So what time of day can you trade? What does your lifestyle give you as far as the time of day that you can spend at the charts? That will dictate the market in which you need to interact with. Now, does that time of day line up with the times that the markets are actually volatile? So a lot of things, most of us are Forex traders here, and what a lot of people ignore is the time of day factor. If you just have a crap time of day where the market's not moving, don't get in the market, right? Just pick a different market. FX may not be the one for you. However, just sit down and analyze that. Now, what instruments will fit you best? Stocks, Forex, futures, or even crypto. I'm a fan of shorting cryptos, by the way. Now, what information are you learning, and is it logical? Let's see. Who is the culprit?
I wasn't. I used it because I knew it was going to be.
Why is that?
I think more people are coming on, and then they're coming on unmuted. So,
yeah, no.
Is there a way to mute everyone?
There should be. And for whatever reason right now, I can't find it.
What about if you click the unmute all, mute all? Maybe that's an option. I don't know.
Looking to find it. Hold on. More.
I'll do a quick Google search, see if I can find it.
Okay, there we go. There we go. Let's go back actually. Oops. Okay, so what information are you learning and is it logical? Things like moving averages, RSI, stochastics don't actually exist in the actual market. Again, those are, I'll put it to you this way, the indicators that are pre-installed on your MT4 platform or whatever platform you're trading with, it's not useful information. Price is a leading indicator. If you know how to read a chart, you can anticipate where price will turn around, continue, and just in the behaviors of price at all. Again, when you look at the actual market and market participants, a lot of them don't have any clue, and this comes to a shock to a lot of people. A lot of them don't have a clue what a moving average, what a stochastics, what a RSI, a Bollinger Band is, right? Because they understand price and price alone, and that's really what it's all about. So this is a game of price and price only when you study the core of the market. And again, the market participants don't know, don't understand any of that. So you have to as well. These financial markets are actually an auction market. That doesn't mean you have to study auction market theory. So meaning this, it's value-based, buy low, sell high, right? So essentially, it doesn't mean that you have to study auction market theory because there's a lot of, how would you put it, subjectivity around profile trading and all that stuff. So what do I mean by an auction market? It goes to the lowest bid, it goes to the highest offer, essentially. And you have to figure out how you can actually, be quiet, please. You can analyze just looking at a chart where it actually happens. So again, you are trading an auction market. Doesn't mean you have to study auction market theory. Okay, back testing and forward testing. This is a process that you must use to validate an idea. And also the most important thing is to invalidate ideas. I think I spend most of my day actually on the back testing and working out strategies all day long. And that's what it takes. And I've been doing it consistently for the last few years. Aleda, stop. Knowing is not enough. We must apply. Willing is not enough. We must do. And again, that's so true even about trading in itself. So this is an ironic quote from Richard Wyckoff. There are those who think that they are studying the market. What they are doing is studying what someone else said about the market and not what the market has said about itself. Richard Wyckoff. Again, it's true, and it's funny coming from someone who wrote educational material. And again, I think what Richard Wyckoff did was great, but again, it's an overly complicated method, and the market is actually way more simple than Wyckoff makes it out to be. It's probably trader blasphemy, but it's the freaking truth. Get intimate with the market. The losses you take will show you the actual way to make it. As a trader, I write down my, I'm a horrible example. I don't trade journal. I don't have a written down trading plan. I know how the market works and I go off of that. But what I do write down is my actual loss. Well, I don't lose that often. I write down my mistakes on a win or a loss. So anytime I feel like I didn't get the best price that I possibly could get, I'm going back, I'm working backwards, right? Trading is also a process of reverse engineering what you actually did wrong and what you did right? But however, if you want to transition from retail to professional, your losses are typically going to be the key to figuring that out. And I hope that makes some sense. So this is the end of that slide, and those are my kids saying bye, because that's the end of the slide. Chartartisttrading.com, and my email address is actually andre@chartartisttrading.com. Now we're going to get to some actual charts, and we're going to talk about what I actually want to talk about today, which is buying high, selling low. Before I move on, does anybody have any questions? Throw them in the chat if you do. Going once, going twice. No? Okay. Sounds like a plan. Cool. So let's get to the charts. Okay, I do want someone to pick a pair. Someone, anyone, give me a pair. If not, I'll just pick. There you go. GJ. I knew someone would say GJ. That's that's the Widowmaker, man. Like, that's the one pair. If you're not profitable, don't touch GJ. A word of advice: if you're not profitable, do not touch GJ. You will lose your pants. All right. Euro. Okay, we'll do Euro second, Mark. Excuse me. All right, so let's look at GJ on a daily basis. Okay, now trading is a game of price and price alone. And again, it is an auction market, so it's going to go to the highest bidder, it's going to go to the lowest seller. I'm sorry, vice versa. It's going to go to the highest offer, it's going to go to the lowest bid. And it's unique in the fact that it's an actual two-way market. So it's very, 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 very value perceived, if that makes any sense. So again, the first step to understanding buying low and selling high is you don't move the market, right? So you have to have an unbiased approach to your analyzing the charts. What do I mean? Look at the charts as just data, because that's all they are, right? Charts aren't going to lie. And you don't need access to things like order flow, dark pools, and all that other garbage, right? Because the data is there. So let's look at GJ. So again, so you know that you have seller's position here, you have buyer's position here, seller's position here, buyer's position here, and well, what do you know? GJ came right down to right in this area, pushed up. Now, let's mark out the low. Dang near a perfect double bottom. So let's go to a 4-hour chart. Now, when you see a move like this going down, coming into this low, who in their right mind would take a buy? Because again, you if you're stuck with retail knowledge, what are you looking for? Oh, this engulfing candle with the momentum's to the downside, yada, 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 blah, blah, blah. All that trash. All that stuff is freaking noise, right? But if price touched this daily low right here and you click the buy button, how would you feel? Anyone care to throw that answer in the chat? How would you feel trading into this price spike right here? Okay, good. Mark will feel uncomfy. And that's the point, because it's trading is the ultimate part of get comfortable being uncomfortable, because Lord knows 90% of my trades are against the direction price is actually going, and roughly 80 to 85% of my trades are winners. Now, I don't say that to say, hey, I'm the best trader in the world. No, not at all. If you understand how price is actually working from a liquidity aggregation perspective, from an exhaustion perspective, and I'm not talking about retail exhaustion theories. I'm talking about actual bid exhaustion or actual offer exhaustion. That's a real thing that most people don't get. Now, here's another fact of trading. The more price runs, the weaker it becomes. I'll repeat it. The more price runs, the weaker it actually becomes. Now, when you're looking at charts and you're trying to catch, let's say you're trading against price. No, actually, let's say you're actually just looking at price for what it is, and you're looking at essentially a higher time frame. Don't you notice that the down move or up move, or the move that actually reverses, it usually comes after a move in one direction. Now you can actually go over your charts and see that. iPhone, I am going back through and muting everyone once again. Mute yourself, please. If not, I will mute you. iPhone, mute. There we go. That's muted. Okay. So again, the higher or lower price goes. Good Lord. Okay, that person's muted. So now everyone should be muted. So the more price runs in one direction, the weaker the volume gets. And again, there's a difference between volume and liquidity. Most people don't know that. They think volume is volume. Well, volume is actually market orders. Market orders are second priority to the market because limit orders are the market movers. So essentially, looking at this chart right here, I know that the weekend was to the sellers, because you see this candle coming into a daily low, and people are thinking, yep, I'm going to short the crap out of this. When in actuality, it's hitting a price point where the value was to the upside, right? So again, even if you took a trade counting on quote unquote volatility, you can get out of, let's break this down to a 1 hour. If you hit buy on the day on the daily low, and again, I'm not telling you to do this, I'm just giving you what I know how the market actually works. You can take a trade at here just based off of the volatility, right? Because again, most traders can't make 20 pips in a day. You can get 20 pips off of one bounce off of one price. And ultimately, this ran 90 to a tip. But again, you know that up in here, you're going to have some selling pressure, right? Because the market ran into something that it didn't like. Now, I'm not saying it's going to be a reversal. What I am saying, there's going to be some pressure in this area. Why? You don't move the market, and neither do I. So someone's up here selling. Someone's down here buying. Look at this. Someone's, and I'm gonna throw some shots, but it's friendly fire. There's a wick filled crowd, and yeah, this wick didn't fill because again, it's stupid retail knowledge. And then the market rides up here. Retest, daily low, market rides. Let's look at this from a weekly perspective. So from this low to this low, right here, you know there's some bid pressure. Now again, I'm not saying, because again, supply and demand, typical supply and demand says this is spiked through. It's not a good area. Let's hogwash, because again, it's about reading the chart for what the chart actually is. So down in here was a very good place to bid up on the week. So let's break this down to a daily. And this was just a couple of days ago. Now, does why this market pulled up from here make sense? Please type in the chat if it does. Because it's just identifying buying and selling pressure at, I don't want to say just, there's more to it, because essentially it's very easy to call the top and call the bottom of the market. But again, you don't know what you don't know. But does this make sense to why GJ pulled up out of here last night, even though some people might have thought it was a short? Cool. Perfect. So again, it's all about value and perceived value, right? Let's go to a monthly. Again, just more fuel to the fire. But do you think, looking at this monthly chart, does anyone think that this is a long-term buy? And Adam, can you tell me why? Come on. Yes, that's exactly it. And again, it's not resting. It's a mix of resting. It's a mix of resting orders. But again, here we go again. Let's debunk another supply and demand myth while we're at it. institutional traders leave risk on the table because they know their orders will get filled. That's another load of horse poop. Why? If you ran the Bank of Adam and you sold, let's say, up here, but you know there's going to be a different crowd of trader down here. Adam, are you going to leave, let's be realistic, are you going to leave 500 million in offers up here for an extended amount of time if you ran the Bank of Adam? Well, banks don't trade. If you ran the institution of Adam, right, we'll call it Adam Sachs. That's probably a bad name, but it's really a play on Goldman Sachs, so take that as a compliment. See, and again, it's it's logical, right? In most traders, most education, I'm just going to say it, about 90% of the education out there is super, super, super illogical. It goes against logic. So should you trade it? Probably not. We didn't need a special indicator. We didn't need a stochastic. We didn't need anything but a chart. That's all you need, right? Essentially, there's some things I'm leaving out intentionally, and you got to understand why I'm leaving them out intentionally. But it's very, very, very easy to figure out with a high degree of certainty where your lows and where your highs are going to come in at. The market, again, every time I get on a webinar, I say this: nothing's random. Nothing's random, because nothing is random. However, I do think cable fundamentally long term is a short because of the Brexit situation. So that is what it is. But even at the end of last month, right? At one point, this was a candle that looked just like this. So what do you think people were doing? Buying into selling pressure. All right, let's put another line up here because that's really all you need. Let's go to a weekly. We can move it down just a bit. We can get really exact. And I'll give you guys something I used to do back in the day. I would mark out levels like the base of the high of the wick to the base of the candles. I don't do that anymore because again, it's too subjective. But hey, it is what it is. You're looking at the selling pressure in here. Drill down. And I'm not saying top-down analysis is the holy grail because it sure in hell isn't. What I'm saying is knowing, and it's a mentality thing, right? Who takes the same drive to work every day? No one? You guys must all be millionaire traders then. Cam does. Cam, you don't work anymore. You don't count. Who in here takes the same route? Well, in the past. Okay, see, right? It's the same. It's no different. It's these charts are nothing more than human behavior. So if you knew you moved the market at one place because you got a very good price, you're probably going to try it again. Why? Because it's established in your mind that it's a very, very good price. And at that, Matt, and when we're speaking on that, let's touch on trading psychology. At that point, does the market care if you got spanked 14 times as a kid? Does the market care anything about your psychology? No. It's about execution. It's not even about trading psychology, because I think personally, trading psychology should come from your understanding of the market, not because you hate your job or you have you have a crap marriage or whatever the case is. Your job has nothing to do with that, right? Trading is the same thing. It has nothing to do with your personal life. So don't bring your personal life to the charts. Trade the data on the chart. I hope that makes sense. Trade the data on the chart. Be non-emotional about it. And most importantly, let the trade come to you. You don't need trend lines or anything. Well, I counter trend lines, but you don't need any of that garbage to enter the market. You just need to know where perceived value will be. All right. So let's look at this on an hourly basis. This is hindsight. I get it, but now that we're talking, who sees the short up here and who probably took a long, but who sees why this is a short? Type it in the chat. Can you see why this is a short now? And it's high, not down here. We're not shorting down here. We're shorting up here. Do you guys understand that? Why it's best to sell high and best to buy low. We're gonna go over to the chart, don't worry. Yes, no, maybe so. Someone type it in, don't be shy, don't bite. I don't care about market structure. Market structure doesn't matter. Lower highs doesn't mean anything. Because you gotta ask yourself this, does market structure really exist? It doesn't. It doesn't really exist because look, you got higher lows right here, then that happens, right? So it's just about reading value. You have to think past even, again, 90% of retail stuff is wrong. That's why I think the latest study was like 95. 95% of the traders are losing because they're thinking like that. You need to think past the lower highs and the higher lows. You got to think past it. That's key. If you can think past it, or maybe, no. Let's take it a little bit further. Think what caused that, right? And then think past it. Because the market's very specific. So the low, because essentially you can get a higher high and then the market fades. Does that make sense? So think past, question everything. Question everything that you've ever read in a freaking trading book and everything that you've read online. I know how the market works. I Google search it every single day. And guess what? I can't find crap on the internet about how the market works because it's just not out there. But not critiquing you. I'm just saying I'm challenging you to think past it because you need to think about what actually matters. Retail stuff doesn't matter. It's noise. It's trash. But that's essentially what you need to do. So now Matt wanted me to look at Euro. It was a really good buy last night, man. Really good buy. Or was it the night before? I think it was the night before I was long Euro. I didn't trade Euro last night. Okie doke. Okay, one question. Does anybody monitor, so we're trading Forex. Does anybody monitor the dollar index? Perfect. Dixie, you got it. Now, are you actively doing the opposite of what Dixie's doing if you're trading Euro and cable and even GJ? Okay, perfect. That's because you'll be surprised how many people don't do that. And it drives me absolutely bananas. Okay. So in the chat, long term, who thinks the Euro is a buy? Who thinks it's okay? Type out if you think it's a buy or a sell. What do you think? Okay, Adam says buy. Dewey, I miss your voice, man. Hope you're doing well. I just look at my entry signal and trade in that direction. Sell. Okay. One for sell. Okay, let's look at the higher time frame. I'll wait until the trading range ends. Ooh, you're a smart guy. But again, how do you define a trading range? Because a trading range is the market trading in between very specific prices. And you can literally tell if you know where your specific prices are, when the market's gonna expand. I don't like saying breakout because it doesn't ever really break out, it expands. But again, a trading range is the market trading between a maximum of 3 very specific points. And you should be doing business at the extremes. Look at the week. I think this is short. Let's look at the month. Yeah, this is probably a short. But anyway, yeah, this is probably a short. We know we got some selling pressure here. We know we got some bid pressure in here. Get in there. You know me, I'm done with Euro. It's too slow. It's way too slow for my taste. So in between here. And again, I'm being very general, but I can get very specific. I just can't do it here. Weekly. Oh yeah, that makes sense, right? Because you got the bid pressure here. You got some offer pressure here, but again, that ultimately is flipped. But look where it's going. It's going right into an area where I know sellers are going to come in. Okay, now let's look at this on a daily. A little bit choppy, but again, Euro was a very good long last night, night before last actually, because I got long right around here. And I picked longs on cable this morning, and no, last night too. But do you see why the Euro was a long? It's logical though, right? Very, very logical. Because again, even on the daily chart, you got some bid pressure, right? You got some selling pressure too. You got more selling pressure than you do bid pressure. Now, let me ask my question again. Who thinks Euro is a buy? Who thinks it's a sell? Somebody, anybody. Anybody want to change their opinion? Short-term buy, I like that because again, short-term sell, okay. And the thing with that too is you can pick both directions in both days. Short-term sell and longer time frame, yeah. Depends on, it's going to depend on the dollar. We'll see what happens next year because the institutions are saying, because I do a lot of institutional research and I have some access to institutional tools. They are saying that the dollar is going to drop next year. But that's what they're feeding to their clients. I don't know. I don't know. But there was some pretty big news on the dollar that came out. Oil that could prevent the recession from happening in the beginning of the year. So it could happen later in the year. We'll see. And you're right. You can pick both directions because at strategic points, the market's going to go both directions in either way. And here's the thing. If you said buy and if you said sell, you're both right. You're both right. But the question is, where should you buy versus where should you sell? Choppy rubbish until Europe sorts out. Yeah. The way gold's moving to, Stewart, we're just seeing a move out of European stuff. And even though the US equities markets are pulling back, it's the end of the year. And again, people are trying to call a recession. It's just the end of the year. So again, it's profit taking. It's profit taking. So they're not going to hold risk on forever. But you're both right because let's look at it hourly. You can pick both directions, right? Does this spike, find it? Does this spike in here make sense? Why it spiked out here doesn't make sense. You sell high, you buy low. Let's look at the daily and see if we can find any proof. What do you know? What do you know? That's all I got, guys. That's all I got. You got to look to buy low. You got to look to sell high. You need to think past patterns because even if you see a pattern that's really, and again, statistically, most retail trader patterns are crap. They don't perform well. Look past the pattern. What creates the pattern? Price, right? Where this is deemed a good buy, where this is deemed a good sell, and you have to understand that you don't move the market. Flow with the data on the chart. I do have one last presentation, but before I get into that, do you have any questions? Feel free to ask. Just don't ask me about entry because I will not. I'll give you some general tips about entry because I don't know how to keep my mouth shut. Shoot me some questions. You can unmute yourself and ask a question if you please. Someone's unmuted themselves. Go for it. Go for it. Ask a question. Awesome. What time frame do you focus on currently? Dewey, you already know. It's the hourly. John, I'm reserving my trade ideas until I don't make my decisions until that pair gets liquid. So right now it's too soon to tell. I'll be looking for some trades here in Asia in about 2 hours. But it's dependent upon certain price behaviors that I obviously can't get into here in the webinar. But it's dependent upon price behavior. But also understand too that it's Friday. So guess what's going to happen? End of the week profit taking. So, and I'm not saying Friday's a reversal. It may not happen at the open. It may happen near the end of the market where you get some profit taking. And again, that profit taking it typically will show up as a spike. NFP, man, NFP is easy to predict. Now, let me tell you why. Because should I tell you why? No, I can't say why. I can't say why. Dewey, you can call me because you have my phone number. You can call me and I'll tell you what I think. Kuzai, get out of here, man. And I watched you on a video on it. Oh, you jerk. You knew already. If you guys don't know, these are people that are part of the group, man. They're more like family than students. So, yeah. They're just giving me a tough time. But yeah. So Adam knows. You just do the opposite of what price does exactly at a specific point. And there you have it. You've solved NFP. NFP does one thing every single time, and it does it very, very, very well. With that being said, I'm probably going to take tomorrow off trading because again, you guys want to know why you shouldn't trade NFP? All it takes is one yen in the chat, and I'll say it. Adam probably already knows. All right, guys, I'll tell you why you shouldn't trade NFP. Two things. And it's not retail trader theory, it's actual market fact. You shouldn't trade NFP because it's a crap show. Why is it a crap show? Because if you understand that price is moving to the less liquid side of the market, then you also understand that what happens at NFP, typically speaking, is institutions move risk off the table. So have you noticed that price does a lot of this before the news? That's not a function of buying and selling. That's a function of price searching for bids and searching for offers, right? So let's say I pulled, let's say I pulled 8 billion off the market, and that's a pretty low figure. If I pulled 8 billion off the market, price number release, what's price have to do? The algorithms are going to go freaking nuts and search for liquidity. So what's going to happen? The market's going to, it's not hunting. It really isn't hunting. It's more or less the market is searching for liquidity, right? And it's a natural process. So, just don't make it out to be something negative. It's a natural function of the market. The market's going to go searching, and it's going to go searching at specific prices for actual liquidity. Now, you can tell if it's found liquidity by the spread. When the spreads are going haywire, there's not enough liquidity in the market. Once your spreads settle down, your move will actually start. There you go. Bless you. Don't trade NFP though.
Thank you.
You're welcome, man. Yeah, I like the new profile pic on IG, Kuzai, by the way. Looking like
thanks.
Looking like a supermodel, man.
I try.
But yeah, that's why you shouldn't trade NFP. And if you don't understand what I said, the replay will be up hopefully soon. That's why you shouldn't trade NFP. If you don't have, I'm just gonna be blunt. If you don't have the skills, right? If you don't know how to read what's actually going on in price, just don't do it. Because like a lot of traders get chopped up trading rollover. I know a couple people that blown accounts trading rollover, and it's like, why would you trade rollover? The spreads are going haywire. The market doesn't know what it wants to do just yet. When the spreads settle, that's when that's when you can look to get in. Because the only fundamental thing I trade is interest rate decisions, and those are pretty much the simplest ones to trade because you're gonna get a market move that's gonna last for a week, 2 weeks, 3 weeks, a month, because that's what really moves FX essentially. So yeah, interest rates. If you don't know what I'm talking about, Google interest rate differentials and do some homework on that. All right, guys, any other questions? No? No more questions? All right. All right, guys. So before we get going, I do want to talk about the new chart artist program that's coming up and how you guys can be a part of it. So give me 1 second. Let me load this up and we'll get going. Hindsight, I probably should have had this ready already, but yeah, I'm a lot like my son. I fly by the seat of my pants. One new message. AJ, what happened? Again, Kazai, you need to reach out to me because, yeah, you need to reach out to me. Message me on Discord. And if you're cool, I'll clue you in on a discovery I just made. But AJ is phenomenal. One of my favorite pairs to trade, AJ and NJ. So if you're a US trader, you don't know what to trade to in Asia because the majors aren't moving, there's nothing wrong with the yen pairs. It's just straight noise. All right, guys, let's go in. Let's get into it. So we are now doing a 90-day boot camp for chart artist trading. Now, I don't want you to think of it as a 90-day program because if you come on board with me, you're stuck for life. So yeah, if you come on board, you're just freaking stuck for life. So 90-day boot camp, I'm going to give you a brief overview. Okay. So what will you learn? The origin of price, section 1. These are all going to be sections for this boot camp. Origin of price, change in behavior or exhaustion, dealing ranges, which I think are really key. Key price levels, how to spot them, entries, continuation volume, because again, most people get caught up in trying to call the reversal when you probably should be calling the continuation. Buying and selling pressure, which I kind of went over today, versus lack of interest, because there's a definite difference. There's a difference between bid or offer exhaustion versus actual intentional shoving the market in one direction. Location, location, location. I'm going to keep that a secret. Clearly defined trading ranges, something I got at a bit earlier. Clearly defined trading ranges in understanding where price will go. The anatomy of the daily, weekly, and monthly chart. Yen pairs, Asian and Pacific pairs, and what they react to, because again, most people don't understand what these pairs react to. Prices professional traders look at and why you should too. I pride myself on the due diligence I've done with professional traders I know in my own research, so no holds barred. Volume analysis and what that means as far as reading the mind of the market. Again, this is 100% an auction market, which makes it key that you buy low, sell high. Just don't buy high, sell low. Natural price cycles that no one talks about. I'm not going to even clue you in on that, but some of the guys in my group know it. Please don't type that in the chat, or we'll have to fight. There's a natural price cycle that no one talks about. And again, it's very, very real. Entry in the here and now and entering inside of a trading range. That's the key to low drawdown entries. Again, your goal as a trader needs to be perfection, 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 perfection. If not, don't know why you're doing it. Trade management with the hourly chart and Heikin-Ashi candlesticks. What regular candlesticks do a decent job of hiding, the Heikin-Ashi does not. And I'll show you guys how to spot that. Holding the trade, knowing when to hold it, and just as importantly, when to let go. Now, throughout this webinar, you have not heard me say anything about support and resistance because I think it's horse poop. Support and resistance is stupid. It doesn't exist. So specific prices versus support and resistance versus price behavior, and you choose what's best for you. I'm not going to tell you don't trade support and resistance, but it's too subjective. You need specific stuff. This is the game of price, not a game of having vertical, horizontal lines all over you. Supply demand lines and why they work. And again, people talk about supply and demand zones. We're going to talk about supply and demand lines and how precise they are at predicting continuation and reversal points. Gaps and when they fill versus when they don't. Why the price chart is nothing more than professional behavior and how you can see it that way. Trading videos on the simulator where I kind of just walk through the things that you see here. When to move your stop and why, because again, everyone talks about trailing stops. You should only trail your stop at specific points. Forex options expiry and how to spot them. Not binary options, but actual Forex options. Okay, so month one, intense group sessions, 2 per week. Hey, can you mute yourself? Can you check your phones, screens, tablets, whatever you're on, and mute yourselves, please? Except for Kudzai, he can stay unmuted. Intensive group sessions, 2 per week. Sessions are recorded for you to review at any time. Month 2, weekly follow-up sessions, 1 per week. Sessions are recorded for you to review. Whoops. So as requested, we do one-on-one sessions. I like to do a minimum of 3. These one-on-one sessions I don't record because I may record some of them, but for the most part, they may or may not be recorded because again, hard drive space, and I'm tired of paying for Dropbox and Google Drive. Private group access, where you'll get to meet some of the lovely guys in my group that are, busting my chops on this webinar and why we get along so well. Direct message me at any time. I frequently message you guys back at 3 a.m., 1 a.m. Doesn't freaking matter to me. If I'm woke, and I'll reply. 3 institutional grade indicators, and they may be going up. And then you will also get access to current stuff that I have. Now, this is value to me personally. And again, it's what I deem as being valued at $4,995. However, I know this is steep. So, well, if you act now, we're gonna cut that damn near in half. So it's only $27.5, and this is good for the next 24 hours. Now, I'm not gonna put a freaking checkout link in here because I don't want everyone on this webinar to sign up for this. I only want you to email me at this email address, andre@chartartisttrading.com. The purpose is I need to screen people because what I'm gonna show, it's not on the freaking internet, and it will never be on the internet. And there are non-disclosures involved. So if you do try to spill my stuff on the internet, you will be sued. I've already had one instance of someone ripping off material and putting it in other groups, and that person's been dealt with. And I don't want to go through that anymore. It's a waste of time, my time and your time. So just respect the information. So again, there's no checkout link because again, I don't want system hoppers. I want people who want to learn how the market actually works. And again, it's not theory, it's actual fact. And if any of my students in here, you guys aren't even my students, you guys are like my family. If anyone wants to type in the chat and again, this is totally improvised, I'm known for doing this, what you think of my mentoring, feel free to type in the chat right now for people who aren't a part. And they hate me because they're not typing it in the chat. Oh man. Or you can unmute yourself and
I think they've all jumped out.
I know, the jerks. I'm in 2 weeks and it's mind blowing. I'm glad I can blow your mind. I try. I work very hard at them, and you guys have no idea the depth of information that we do.
Yeah, I got to concur with Adam. It's absolutely mind blowing. It is mind blowing. And if you think if you've bought courses before and been on courses and had education around trading, I mean, this is next level. This is absolutely next level, I've got to say. So, I mean, I've been with you since over a year now, a year and a half.
Yeah.
And the amount of information, which is you will not find it anywhere else, is phenomenal. And not just that, it's the fact that, I mean, I think it's also the way that you teach as well. And, you know, it's not just it's not just a student mentor relationship. It's more of a kinship and a friendship as well. So, you know, and hence why you've got to obviously screen people, which makes sense.
Yeah, I have to now. Yeah. I didn't even tell you about I found my material in someone else's group. I'll tell you off.
Yeah, you haven't told. Yeah, you meant
I'll
not
tell
mentioned
you off. Yeah. It pissed me off. Kudzai, thank you, man. He says you're going to honestly get walked through the process, and Andre, make sure you work hard and you will see results. And that's the truth. I don't take mentoring lightly. I don't just want your money. I want you to learn. I can give a crap less about the money at that point. The thing is, it's the time aspect, and I have to put a value on the information. And the old pricing just wasn't cutting it, and it just goes into a lot of the research that's been done. And Jesus, you guys have no idea the level of work that went into building something that can get you an easy 80% win rate. But it's not easy because you have. Here's the reality. You guys can come into this program and get all the information and rah. It's good, it's great. But if you don't make the changes, then why does it matter? It doesn't matter. You just paid me for no reason and you've gotten no value out of the program. I don't want that. I'd rather you, again, get a signal service. If you need money managed, I know a couple people who manage money. You're probably better off doing that and then learning how to trade. And again, if you need a signal service recommendation, I have one for you. It's actually a guy that used to be on Cam's podcast. The kid's a phenomenal trader. But yeah.
Who's beeping?
Huh?
Who's beeping?
That's my excellence right there.
Oh, okay. Cool.
No, I really don't know. I don't know.
Yeah. No, but
I think it's David, I think.
Oh,
okay.
It's okay. We're about to wrap up here anyway. But yeah,
Point,
go ahead.
you get a lot of work because me and you, like, we go back and forth a lot. And whenever I'm going through anything, I normally just text you and then we jump on a Zoom session.
Yeah.
So it's like, if you join Andre, you're going to be knowing Andre a lot more. You're going to be seeing Andre Jr. in the back. We drop a lot more. But it's because we spend a lot of time together because it's just always, Andre, here's what I'm thinking, here's what I've seen. And then we always have a breakdown. So you're going to get to understand price a lot more. You're going to get to become a lot more confident because I'm more confident with my trading now because of just going through sessions with Andre. So if that's what someone's looking for, that's what you get. And it's pretty much, you have to put in the work though, because it's like, Andre is not going to give you like holy grail, but you have to put in that work, but he will teach you everything you need.
Yeah, and I'm not going to hold any punches. And you know that. Yeah. Like, I'll call you on your crap. And that's how it has to be, you know? And you get to meet my freaking family. And it's a riot in here, but again, it's fun. So again, if you guys want to end, just email me, andre@chartartistrading.com. We'll set up a time to talk. And then we both determine. If you don't like me, it's okay. If we don't vibe, we don't vibe, you know? So again, if you want, email me, we'll talk. I want to know a little bit about you, your background, what you've been through as a trader, and see if we have a fit. If we have a fit, let's go. If we don't, it's okay. It's A-okay.
And
recommendations, let me know.
I think you got to remember the boot camp's pretty much starting ASAP, isn't it? So...
Oh yeah, so yeah, hop on it.
so you've really got to make that move now. If you're on the fence, and look, guys, if you want to message me and ask questions, then feel free. I'm happy to answer them as well. So yeah, brilliant. Hey, look, thanks, Andre. That was fantastic. I think as per normal, you know, I'll learn stuff every time I watch anything that you do. I'll learn something new, and today was no different. So. Cool. Thanks for presenting and giving these guys the opportunity to learn.
Thank you, Cam. All right, guys, if you have any questions, just again, email me, andre@chartartistrading.com. Hey, no problem, Mark. Thanks for sticking through the whole webinar. I appreciate it, guys. So Have a good day. Happy trading. Good luck out there. Don't lose the house, and don't trade GJ if you don't know what you're doing. All right, guys.
See you guys.
Bye.